Asia's private market revolution. Inside Tikehau Amova's game-changing venture today, we're diving into what might be the most significant private markets partnership of 2025. Nikko Asset Management and Tikehau Capital have joined forces to create Tikehau Amova Investment Management, a venture that's set to reshape how investors access Asian private markets. If you've been looking for ways to diversify beyond traditional stocks and bonds, particularly in Asian markets, this analysis is essential viewing. We'll break down what this partnership means, the investment strategies they're launching, and most importantly, how you as an investor might approach this opportunity. Before we dive in, remember to subscribe and hit the notification bell to stay updated on the latest investment opportunities across Asia. Now, let's get into the details of this groundbreaking partnership. Background on the joint venture. So, what exactly is Tikehau Amova Investment Management? Recently incorporated, this joint venture combines Nikko Asset Management's deep regional expertise across Asia with Tikehau Capital's alternative investment prowess. Nikko Asset Management brings to the table its massive distribution network across Japan and the broader Asian region. They're one of Asia's largest asset managers with exceptional market insights across the continent. Tikehau Capital contributes its specialized expertise in private markets, particularly in private debt, private equity, and sustainable investments. They've already established a foothold in Asian private debt through their partnership with UOB Kay Hian. This collaboration isn't just about pooling resources. It's a strategic response to the surging investor demand for private asset investment opportunities in Asia. As public markets become increasingly efficient and volatile, the potential alpha in private markets has become too significant to ignore. Key investment strategies. Let's break down the specific investment strategies that Tikehau Amova will focus on. First, they're launching a dedicated decarbonization strategy for Asia. This is particularly interesting given the scale of the energy transition challenge facing the region. Asia accounts for nearly 60% of global carbon emissions, creating an enormous opportunity for investment in transition technologies, renewable energy infrastructure, and sustainable businesses. This strategy will likely target companies driving the low-carbon transition across various sectors, from renewable energy producers to sustainable manufacturing and green building technologies. The second major focus will be expanding their private debt capabilities. Tikehau already has a strong foundation here with their UOB Kay Hian partnership. Private debt has become increasingly important as many mid-sized Asian companies find themselves underserved by traditional banking, but aren't ready for public markets. These private debt investments can potentially offer investors enhanced yields compared to traditional fixed income, while still providing more stability than equity investments. Finally, the joint venture plans to develop entirely new private asset strategies tailored specifically for Asian markets. While details are still emerging, this could include specialized private equity funds targeting specific sectors or regions, real asset investments, or hybrid strategies combining multiple approaches. The key advantage here is their ability to leverage both firms' expertise to identify unique investment opportunities that might be overlooked by purely Western or purely local investment houses. Market opportunity analysis. Now let's analyze why this joint venture makes strategic sense in today's investment landscape. Private markets in Asia are still relatively underdeveloped compared to North America and Europe, representing both a challenge and an opportunity. While the private equity market in the U.S. accounts for roughly 40% of the overall equity market, in Asia, that figure sits at less than 10%. This gap creates a tremendous growth opportunity as Asian economies continue to mature and investor sophistication increases. Many institutional investors are actively looking to increase their private market allocations, particularly in Asia, where public markets don't always provide access to the most dynamic growth sectors of the economy. Tikehau Amova's potential advantage lies in combining Western private market expertise with deeply embedded regional networks. This allows them to potentially source deals that purely international firms might miss while applying institutional quality due diligence processes that might be more robust than some local alternatives. The distribution network is particularly important here. Nikko's extensive presence across Asian markets provides ready access to institutional investors, family offices, particularly in Greater China, and potentially even retail investors through appropriate vehicles. How investors can approach the opportunity. So now for the most important question. How might investors approach this opportunity? For institutional investors, Tikehau Amova represents a potential strategic allocation within a broader private markets portfolio. The key considerations here would include: first, conducting thorough due diligence on the governance structure of the joint venture. How are investment decisions actually made between the two firms? What mechanisms are in place to manage potential conflicts of interest? Second, evaluating the fee structures relative to comparable offerings. Private market investments typically carry higher fees than traditional assets, so understanding the full cost structure is essential. Third, starting with a modest allocation until a track record develops. While both parent companies have strong individual track records, the joint venture itself is new, and prudence suggests a measured approach. For qualified individual investors, approaching Tikehau Amova might involve looking for feeder funds or other accessible investment vehicles. Most private market strategies have high minimum investments, but distribution partners may create more accessible entry points, considering liquidity needs carefully. Most private market investments involve lockup periods of several years. Investors need to ensure they won't need that capital during the investment horizon. Starting with smaller allocation percentages, typically in the 5 to 10% range for most individual portfolios. For all investor types, key due diligence questions should include: how is investment talent being retained and incentivized? What is the expected capital deployment timeline? How are the economic interests aligned between investors, Tikehau, and Nikko? What is the track record of the specific team managing each strategy? Conclusion: Tikehau Amova Investment Management represents a significant development in Asian private markets. By combining Nikko's regional expertise and distribution network with Tikehau's private market capabilities, they're creating potentially unique investment opportunities focusing on decarbonization, private debt, and other innovative strategies. For investors seeking diversification beyond traditional assets and exposure to Asian growth themes, this joint venture warrants serious consideration, with appropriate due diligence. Of course, this partnership combines complementary strengths in Asian distribution and private market expertise. Initial strategies focus on decarbonization and private debt opportunities. Investors should approach with appropriate due diligence and allocation sizing. The venture addresses growing demand for private market exposure in Asia. Remember that private market investments aren't suitable for everyone. They typically involve higher fees, longer lockup periods, and different risk profiles than traditional investments. Always consult with a financial advisor before making significant portfolio changes. If you found this analysis valuable, please hit the like button and subscribe for more insights on Asian investment opportunities. In the comments below, let us know which aspect of private market investing in Asia you'd like us to cover next. This is Sean for the Copy Notes. Thanks for watching, and we'll see you in the next video.